This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, May 19th, 2015. Euro dollar. So the euro has broken down a little bit since recovering all the way up towards the 114.67 area the other week, although the setbacks are just viewed as corrective within this more significant correction out from 12-year lows from 104.62. The market ultimately broke above a neckline of a double bottom that projects gains still up towards the 115.35 area, and so these current setbacks are nothing more than corrective, and setbacks should be very well supported for now ahead of recent lows that we saw going back to the 11th of May, which come in around a 111.30. At this point, only a break back below 11.30 would compromise that outlook, while ultimately a break back below the previous neckline, which comes in around 110.50, would be required to put the pressure back on the downside and open the door for a more medium-term bearish resumption. Sterling dollar. So cable has seen a bit of a setback over the past couple of sessions after the market broke last week to fresh 2015 highs at 158.15, although the market is still seen higher potentially, with a higher low sought out ahead of the next upside extension up towards the 159 to 160 area. At this point, a break back below 155 would be required to put the more immediate pressure back on the downside. Dollar yen. So dollar yen continues to consolidate. The market has not really done much over the past several weeks and months, although the contraction and volatility here does warn of a major breakout ahead. A break back above 120.50 or below the recent lows that we saw around 118.20 would be required for clear directional insight. Euro Swiss. So Euro Swiss looks like it's in the process of carving a higher low, with the market now needing to break back above 105.25 to confirm and open the door for a resumption of gains back towards that high from February at 108.15. Really only back below the recent lows that we saw around 103 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has pulled back in recent sessions, although the market is expected to now find really good support by previous resistance in the form of the neckline of a double bottom formation in favor of fresh upside over the coming sessions back towards a measured move objective in the 80 somewhere around the 83 area. At this point, though, only a break back below or a close below that previous neckline, which comes in at around 79.38, would be required to put the pressure back on the downside. Dollar CAD. So dollar CAD has seen a nice little bounce in recent trade, with the market rallying all the way up from recent lows in the 118s back above 121. Although the market is still in the scene correcting off those recent off the recent breakdown from 123.50, with the potential for deeper setback still towards a measured move objective around 118.65. However, a break and close back above 122.05 would suggest that the market has finally put in a base by that low that we saw the other week at 119.19, 119.20 in favor of a more significant bullish resumption. Kiwi dollar. So ultimately, Kiwi's putting in a lower top around 77.44 to be confirmed on a breakback below 71.76, which will open the next major downside extension towards the 65 area. Any rallies in this market should continue to be very well capped, while only a breakback below 77.44 would compromise the bearish outlook. SPX 500. So the S&P 500 is finally broken out to the top side, with the market clearly taking out previous resistance around 21.26. Those are the previous record highs, and closing above that 21.26 area to open the door for the next major upside extension, potentially towards 2200 further up. At this point, a break back below recent lows that we saw around 2084 from the 12th of May would be required to take the immediate pressure off the top side in the equity market. Gold. So gold has recently closed above 1225, and this close does suggest that the market could be putting in a more significant base and could be poised for fresh upside over the coming sessions back above the recent highs in the 1225 area and towards 1300 further up. At this point, only a break back below recent lows that we saw around 1210 would take the immediate pressure off the top side and suggest the market is still trading within a more well-defined range over the past several sessions. That's all for now.